conference. We've learned a lot about sort of banking, fintech, and payments, and what's actually going on in that space. So it's late in the afternoon, so I'll be quick, and I won't take up too much of your time. But since I'll be talking about myself, only kidding, I'll be talking about the Generation Z, and to kick it off, I hope you will have Instagram or Twitter. And if you do so, please do tweet with the hashtags. That would be good. So let's get right to it. So with the person next to you, ask the following question, exchange cards. If age is only a state of mind, what is your state of mind right now? Are you a cheeky child? Are you a tormented teenager, or a mad midlifer, or a groovy grandparent? So, coming on to the Generation Z. So the Generation Z sort of started in 1997 onwards, and these are the first connected kids. These are the kids that are sort of very socially connected, always sharing their lives on social media, what they do when they wake up, when they sleep, and in terms of what they do and what they believe in. So, the difference between, what do Generation Z actually value and what they are? So according to a recent report by Bloomberg, Generation Z will outnumber the millennial generation within a year, roughly defined as those born after 1995. And it also says that by 2020, it's expected that they will command 40% of all spending. So what really matters to Generation Z? It's all about being different. More than half of Generation Z uses screen media for more than 4 hours a day. And they believe happiness is their ultimate goal, and especially through financial success. So what millennials and Generation Z really expect from their banks and service providers? So, shared values. With Generation Z representing a quarter of the population in Europe, they live in an era of connected world surrounded by mobile phones, Wi-Fi, and internet access. Now, what does that really mean? The Generation Z shares so much information online. They'll share what they eat, what time they sleep, when they wake up, where they go, what their daily routine is, and actually what they really believe in. And this is where the banks can really target and actually give something back. Now, a lot of the things come towards politics, for example. The Generation Z are so much into politics that actually, what is it that the banks are doing? What are the banks doing to give something back to the community? And that is something that the millennial generation really value. Loyalty. So for banks and other service providers, the mindset uptends traditional business models that rely really on face-to-face relationships. But actually, the Generation Z set the bar much higher. They're eager to try emerging technology and willing to switch. This is where the banks will, in the future, appreciate the fact that they now have to change, and they have to change really quickly. As technology is emerging, new products and new services are coming out into the market, they have to change. So payments is just a step. Why I bring this up is sort of banks now need to move away from just providing payment services. It's not about payments or loans or lending facilities. It's more around what does the Generation Z really want? What do we actually need? And it comes down to the fact that consumers, everybody loves shopping, everybody loves eating, everybody loves traveling. So what is it that the banks can do to give back? To actually, making sure that they're a one-stop solution for everything that a consumer needs. So banks becoming facilitators, this comes back to my previous point where I said that actually what is it that the banks really need? Yes, they want to buy a car, they want insurance, they need a loan, but actually there's stuff more to that. It's more around financial inclusion, it's more around giving something back to the community. It's more around, providing opportunities for them to save money, to invest money in their future. And the question is, how is it that the bank can really do that? So the way that they are doing it, and especially in the UK right now, the challenger banks are really picking up on this. They're building up marketplaces of different products that are not owned by them. Wealth management, savings, loyalty, and they're bringing that into the app to make sure that there is a one-stop solution, a one-stop place for all these products and services to be in the market. So I'm going to talk about digital transformation, and the reason why I'm going to do it, I'll explain to you in a minute. So digital transformation, I like this quote. It's like drying a body after a shower. You start from the top and then you go to the bottom. Otherwise, the water will sweep down and screws into your organization. So what that basically means is digital transformation has to start from the top. And when there's no, it's okay to talk about it, and everybody is talking about it, but actually what is really going on in the marketplace? What are people really doing to target these customers, digitally transform? So the 3 P's of digital transformation. The most important one that I always talk about is people. And before your organization can digitize, your people have to transform. And to transform, change is hard. Then we go into the process, and the process is both, is it external, is it internal? And what is it that affects the customer experience? Should we be an online bank? Should we be a digital bank? Or should we be, an online and a branch bank? Should we launch in the UK? Who do we target? How do we target? And what means do we target the customer? Then you come down to the product. So today's products are really about product plus experience, which naturally leads to these questions. What impact will digital transformation have on your product? The experience around it? And also, how is your product going to evolve because of this? And most importantly, the whole user experience. And as I said, all of these go in hand. You cannot do one without the other. But your most fundamental point is people, and you need to transform your people. So, how fintech is targeting the Generation Z market? So let's have a look at the payments ecosystem. So you have the consumers, you have the e-wallets, e-wallet platforms, credit cards, card associations, but then you also have stuff that go on the back end. So you have the third-party processors, the acquirers, the point-of-sale technology, integrated systems. As a millennial, as a Generation Z, we can leave our wallets at home, no problem. But when we leave our phone at home, it's an issue for us because we're not connected, we're not talking to people. So how can banks really target that method of delivery? And how do they do it? It's through the wallet scheme. So through Apple Pay, all the payment schemes are out there where you don't even need to carry your card with you when you're making a payment. So investments. Investments are broken down, so robo-advisory, pensions, savings, personal financial management. And actually in the UK, the Generation Z are now so much into wealth management and investment saving for the future compared to the older generation. And the reason why is because obviously they know what the economical state is, they know how, what happens when there's political instability, and how they can actually sort of save. And there's platforms there. I use some of these platforms, and they're really good platforms, and where I can, if I buy a coffee for, let's say, £1.30, 70 pence of that can go into a wallet, which then is invested into something that I can then later on rely on. So lending, alternative finance has increased. So let's just go back a little bit on why lending is important. Traditionally, the banks are not lending to the Generation Z, and the reason behind that is because of the risk appetite and also the credit scoring system. The Generation Z don't have a good credit profile for them to actually take out a loan or to take out a mortgage. So where do they go to? It's these alternative financing methods that sort of bring it in. And traditional banks are not lending, as I said, but it's more around the P2P and crowdfunding. So I'll talk about what P2P is, because it's a big market in the UK, and how sort of P2P is really targeting the Generation Z, both in a business context, but actually on a private scale as well. Okay, so this is from another source. So it basically talks about what the industry leaders expect from lending and sort of what their advice is. So I'm not really going to go through that, but what I really want to talk about is actually the P2P part, which is not there. But so what happens in a P2P is basically when you want to raise funds or when you need a loan for a social cause or for something like that, what you'd essentially do is, you'll sign up to a platform, you'll put a bid into it, and investors will then bid to you. And when they bid to you, you then decide, whether you want to go forward with it or whether you don't want to go forward with it, and if so, how you want to do that. And actually, P2P market in the UK is pretty big. And actually, that's really good that we got this side, is because it comes into the social banking and the social payments element. Now, The social banking basic is referred to sustainable banking. Well, it used to be referred to sustainable banking, but now it's changed and it's evolved over time. Because we are so socially connected, it's about doing payments and banking activity through social networking channels and and sort of lending through P2P. So, in the UK, Google Pay, Samsung Pay, and Apple Pay are sort of the big players. But actually, we now have WeChat Pay sort of making its way into the UK as well. So that was the slide I was talking about with P2P and sort of what happens in that market. So closing financial literacy gap. This is very, very important. And banks need to be clear with their wording. You'll be surprised at the amount of stuff that the banks talk about, but nobody really knows what's going on in that space. The UK has made a really good progress, but there's still a lot that needs to be done. They've basically launched, every single regulated bank in the UK has to have a 2-page document which summarizes the key facts. It's called a key facts document. But even still, people don't read that, and it's not there. But also the small print. The small print just needs to go. And the reason why is because nobody really reads it. And it's not, there's so much jargon into it. But actually, there's one bank in the UK that's actually doing a very good job of it in terms of sort of looking at simplifying that, and it's Monzo. So what they do is they don't use big jargon, they actually use emojis. So emojis as a method of communication to the younger generation, because whenever we send a message or do a post, we're always using emojis. It's like expressing ourselves. It's confusing and confused. So with the banks, the whole talk about it's very confusing. When you go take out a mortgage or when you take out a credit card, you don't know what you're getting into until the consequences come and hit you.